Hi everyone. We are going to look at Chapter 19, which is Job Order Costing. Job Order Costing is going to take us a little bit more into that manufacturing process, and we're going to look at some of the differences in the different costing systems. So we can have process costing, which is in Chapter 20. We actually don't cover that in Accounting 2. It's not in our syllabus. And then obviously this Chapter 19 is job costing. So process costing is when we have mass production. It's also called process manufacturing or process production. And it's where you're doing mass production in a continuous flow. Job order production is where every product is different or specialized. It's built to order rather than being mass produced. So job order production or job costing is going to be referred to kind of the same thing. So we're going to be looking in Chapter 19 about job order costing and job costing. So let's look at this one where we're looking at job order operations and then process operations. So both job order and process are used in manufacturing and service companies. So this slide kind of shows us the important features of job order and process operations. So both kinds are used by manufacturers and also by service companies. So for example, movies made by Walt Disney and financial audits done by KPMG are examples of job order service operations, where order processing in large mail order firms like LL Bean is an example of a process service operation. When we look at the next part, we're going to use the example for road warriors as we go through this chapter, and that's kind of what we see here. We can see an overview of a job order production activity, and it shows the cost flows in here. So this is a 1-month production. It's for road warriors, which they install entertainment systems and security devices in cars and trucks. So the company customizes any vehicle by adding speakers, amplifiers, video systems, alarms, and then reinforced exteriors. So job order production for road warriors is going to require materials, labor, and overhead costs, which we can see over here to the left. Remember that direct materials are used in manufacturing, and they can be clearly identified with a specific job or a particular job. The same thing with direct labor. It's devoted to a particular job, where overhead costs support production of more than one job. When we think about overhead, some common overhead items are going to be depreciation on the factory buildings and equipment, factory supplies, both indirect materials are included in there, supervision and maintenance, cleaning, and then utilities. So this shows us that the materials, labor, and overhead are added to jobs B15, B16, and B17. B18 and B19, they're all being started in the month of March, but we can see that some of them continue on to finished goods and then are sold, but not all of them. So we can see that job B15 and job B16 are completed and moved into finished goods, and then they are also sold, so they go into that cost of goods sold. Job B17 is completed, but it wasn't sold. And job B18 and job B19 are still in the process of being made. They're not finished in the month of March. All right, so to keep track of each of these jobs, we're going to use something called a job cost sheet, which we'll look at. So when we're looking at the flows, that's what we're going to get into with a job cost sheet. We're going to be tracking the flows of raw materials, whether it's direct or indirect materials. We're going to be looking at work in process, the job that's being worked on. Finished goods is when the completed goods are transferred in, when they're done and ready to be sold. And then our cost of goods sold keeps track of what we've sold. So we're going to keep track of those for each job. All right, so let's look at a job cost sheet. When we're thinking of this, we need to know what it costs to produce each job or each job lot, and we'll have a job cost sheet for each of those jobs. the reason that we want to do this is it's going to allow us to keep track of those costs. So this slide is going to show us a job call sheet again for Road Warriors, and it identifies the customer. So we can see Carol Connor is our customer. We can see the job number, which is job B15. We can see the address for the customer. We can see the job description, where it tells you what they are making. So this is the level 1 alarm system on a Ford Expedition. We are also going to be able to see the direct materials, the direct labor, and the overhead. Along with that, we're going to see the date that we promised it, as well as the date that it started, and if it's completed, we'll see the date that it's completed. And we can see if that date completed falls into the date that we promised it to the customer. Sometimes it will, but there could have been a delay, and so sometimes it may not. So direct materials, we're going to see them as they're used. We're going to see direct labor as it's worked. And the overhead, we're going to talk about how we get to that part later. We also see some key dates, the requisitions for the direct materials. We see the time ticket that goes along with the direct labor. We see a signature when that job is done, saying that it's done. And we see a total cost. So the balance in the work in process comes from this throughout the process. So we can see this total cost. So we see that the materials, labor, and overhead all add up to that total cost of $3,200. So the balance in cost of goods sold is a total of all job sheets that have been sold and delivered. All right. So there are other documents that we're going to use throughout the process. First is going to be the materials ledger card, and we'll get into that in just a second. And we're going to be looking at the materials that are received based on a receiving report. That's going to be our source document. The material ledger card is going to be updated when materials are purchased, and it's going to be issued for use when we're doing that production on that item. So again, we're using that Road Warriors example. We are going to see the materials ledger card example that we have here. We have the item that we're making, which is an alarm system wiring. It has a stock number M347. It tells us where we can find it in the storeroom. It is in bin 137. The most we will have on hand is 5 units. The minimum on hand is 1. When it gets to this level of 1, the quantity we will reorder is 2 units. And then we can see that we had 1 on hand. On 3-4, we bought 2, so now we have 3 units. We used 1 of them on 3-7, and that left us with 2 units at the end. So this is done for each material that we're going to be using in our job process. When we look at the next part, materials requisition, when we need to use materials, there has to be a materials requisition to tell what you want to use so that there is a record for it. So we're going to, the production manager is going to prepare this materials requisition. They're going to send it to the materials manager. If it's direct materials, the requisition is going to show the job number, the type of material, the quantity needed, and the signature of the manager. So here we have one for an alarm system wiring for job B15 again. It is for indirect materials, and that means that it cannot be traced. So, I'm sorry, this one is for a direct material, so it's showing that it's for alarm system wiring, material number M347. One is requested by C. Luther. It's provided by the materials manager, M. Bateman, and then Luther is signing that they received it on a specific date. So the requisition's made, and then when it's filled, it is signed again to show that it transferred from one place to another. If we had an indirect material, which we couldn't trace to an individual job, that job number line might read for general factory use instead of job number B15. So this one is a direct material. All right. If we're looking at the direct materials that were requisitioned for these different 5 jobs that we saw before, we had jobs B15 through B19. We had a total direct materials of 1,800. And then what we're going to see is that we're moving it out of raw materials inventory and into work in process inventory because we're starting that materials into the process of making that finished good. So we have to move it out of raw materials bin into work in process once we start that. So that's what we're going to be looking at. All right, the next part we're going to look at is the labor side of it. So we also need to track the labor in as much detail as we did for the materials. So if we have direct labor, it goes on the job call sheet. If we have indirect labor, it goes to our factory overhead ledger. So labor is the next manufacturing cost that we have to account for. This one is showing the factory labor costs are either classified as either direct or indirect labor. And that will show you how we're going to log that. When we look at the labor time ticket, this is just an example of one, and it's reporting the time a Road Warrior employee spent working on job B15. So it shows that time ticket number L3479 was for March 8th. The employee's name is T. Zeller. It gives their employee number, what job they're working on, what time they started working on that job, what time they ended, how many hours, and their hourly rate, so that we can then calculate that total cost of $60. We're going to do the same thing for each of the jobs B15 all the way through job B19, and we can see that we have direct labor, a total of 4,200. Again, we're tracking, then recording it in one entry. So we can see here that we have it's going into work in process inventory, and we're creating a liability that we're going to pay them on payday. So the liability is called factory wages payable. And we're going to be journalizing that direct labor monthly. So we have a total factory cost of $5,300. $4,200 is direct labor. $1,100 is indirect labor. Indirect labor is going to be placed in that overhead. All right, so let's look at how do we know the overhead costs. That's what we're going to look at next. So we are going to be looking at the flow. So we can't wait until the end of the period to allocate overhead to jobs, because with a job order costing system, we're using perpetual inventory records that require up-to-date cost. So here we're going to be looking at something called an estimated overhead rate. So we're going to be estimating the overhead cost, and even if it's not exactly precise, that's what we're going to use to estimate the job cost before it's actually being completed. So when we're looking at that, we're going to be using something called a predetermined overhead rate, because we can't track directly to individual jobs. So we have to estimate what they're going to be for the period. So if we look at the predetermined rate for Road Warriors, it's saying that we're using our estimated overhead cost divided by the estimated activity base. So that's how we're going to be figuring out what our numbers are going to be like. So we have to be able to calculate that estimate ahead of time. So here, the predetermined overhead rate requires an estimate of the total overhead costs and an allocation factor, such as total direct labor cost, before the start of the period. So this is the usual formula that we're going to use for predetermined overhead rate. The rate is used during the period to allocate estimated overhead to specific jobs. Some companies use multiple activity allocation bases and multiple predetermined rates for different types of products and services. For ours, we're going to be looking at the predetermined rate, and this is the estimate that we're going to do for our number. and we'll continue in the next slide.